Right, apologies for the delayed start, everyone. Yep, we're about 5 minutes late here, but good to go now. So here's the risk warning on the screen. As per usual, any questions at any point, just shoot them through to the questions box, and I'll try and address them as and when I see them. Yeah, any markets you want me to cover, any particular patterns you're seeing, yeah, definitely shoot it through to there. We'll aim to have things wrapped up by 1 o'clock in London. So let's switch gears to the trading platform. So starting off in the usual format, so we're getting a little bit of a sell-off here in the dollar, and so this 122.70 seems like a fairly pivotal level here in the euro. We're obviously in this sort of, you know, we're obviously in a fairly clear-cut trading range. Well, I've put this middle rate level in because I feel like if we do give it away again, then actually we probably take out this level through here, but realistically, this is the range we're in, right? 120, 170 up to the sort of 125, 50s. That's kind of the range, but we do have some old resistance back here that I think we could maybe dip down and test should we take out this 122.70. So I mean, the way the day is lining up at the moment, you know, this has been a decent sort of pivot level, and we're, you know, this is a little minor engulfing pattern that we're getting, but I think this by itself, if we close the day as we were, would not be probably encouraging enough for me, especially given that we're below this 50-day moving average and we're in the middle of a trading range. These signals probably aren't going to be quite as reliable, but I think conversely, should we drop back through it, pull back, then we could end up maybe in a more obvious scenario. So something along the lines of, if I can just pull something I made earlier out of this, let's see, bear with me. There it is. So, I mean, that's, you know, when I draw this, obviously it was a slightly less bullish looking candlestick, but, you know, these are probably the scenarios. So it could get another little push up towards this little resistance area that we failed at a couple of times, should we get a decent close above this 122.70 today. Conversely, we could pull down to what was kind of the bottom of this range here, around the 122 mark, and then maybe head down to that old resistance as new support. And obviously we've got this 200-day moving average, which kind of limits our downside while we're above it. But it's obviously a fairly, you know, it's a longer-term uptrend, but it's fairly neutral at the moment. So, you know, we're looking to kind of skim a few opportunities here and there. What is looking less neutral at the moment is sterling. So we're right up at this 140.70. You know, it's the price has fallen away from this level quite dramatically a couple of times. But as you can see, we broke this declining trend line after having held this support with a bit of a false breakdown here. Ended up, I mean, it was hard to know if this break was going to have much legs when we had sort of 3 days of wishy-washiness, but really we held that old resistance. It formed a support. We had that little long-legged bar there on, I think that was Fridays, and then we've pushed high. It's quite significantly higher today. Obviously, there's some fundamental news backing it up. Signs that the EU look like they've accepted the UK Brexit transition deal. So obviously a little less Brexit uncertainty there. That's helped push sterling higher. From here, now we're at a resistance level, this 140.70. So really we want to see how today's candle closes relative to this 140.70 mark. If it closes above, then we're looking for opportunities at short-term weakness in order to keep pushing higher. I mean, it's a very bullish candlestick. You know, it's tough buying at the end of a strong bullish candlestick, but if you can get some kind of pullback opportunity, then it seems quite odds on that we push up to that 142.70 now, having broken this short-term correction seemingly back above the moving averages. If we can confirm it through a push through this resistance, that would look good. However, if we do fail, if we pull right back into the middle of today's range, having failed to get through 140.70, that would be a bit of a softer pattern. And then maybe if the market tries to rally up to 140.70 again, you could look for chances to sell into the level. Obviously, the best confirmation would be if there was just some kind of bearish pattern in and around that level, should we fail to close it today. The kind of thing I'm talking about is if, let me pull this up. Well, it's fairly straightforward, really. I've got a picture here, but it's really what do we do at this level? The arrows up and down from here. Overall, it looks like sterling's looking strong at the moment. It's been through a soft patch while the dollar's been weak against other pairs, but actually now, maybe it's looking to resume its kind of longer-term uptrend. Switching gears to dollar yen. So something's happened a bit strange to the scale here. So it broke this declining trend line. I mentioned this a week or so ago. I mentioned this little pattern down here. If I get rid of this trend line, if I move this out of the way for the time being, this little pattern here I talked about as being a potentially bullish opportunity. We did break to the top side up to that resistance there, or up to those previous closes, basically a tad above 107, and we dropped right back again. Obviously the trend has been quite drastically lower, so looking for buying opportunities is a bit tricky to do. The resistances are still working, but this support is holding for now, the 105.50. Obviously it's just 50 pips higher than that big 105 support number. Maybe we do get one final drop down to 105, but this little pattern here, signs of a triple bottom if you based on today's pattern. It looks like this downtrend's losing steam, but we haven't really got the confirmation yet. And as I just kind of alluded to with this pattern here, we obviously had that large kind of pin bar pattern where we had the kind of basically the mirror image of this pattern at the low. We had the same pattern up here at the resistance. So we're kind of we're consolidating here in dollar yen. The trend is still down, but signs that maybe it's losing steam. To really feel confident that this trend is actually reversed, you'd probably just want to wait for some kind of evidence. I haven't got the 20-day moving average on here, but a solid push through the 20 moving average again with a close above it, or a break of this declining trend line to show that this consolidation phase has come to a close, maybe even just a close above this 107.30 area here. Then you've got to contend with the moving averages. You're kind of fighting against the trend here, but maybe we're due a bit of a pop. And if we are, then it was quite a steep drop down from this peak up here. So maybe we're looking for another run back up towards maybe not 110, but maybe 109 if we can actually break out of this consolidation phase to the top side. Early stages yet, but if we get some nice bullish candles, maybe an engulfing pattern today off the low, that sort of thing can lead us to opportunities to get long in this market. So unsurprisingly, it often is the case, the FTSE 100's doing the opposite to the British pounds. We're getting that break higher in the pound, we're getting a break lower in indices. It's a bit of a kind of generally soft day in the indices as well today anyway. But obviously this is the big correction pullback. I've got it a bit zoomed in at the moment. And then we've obviously been consolidating since, and these last couple of bounces, whereas, for example, the Nasdaq made new record highs, we weren't even able to take out this old high here. So we've had two successfully lower highs, and then we had this kind of dark cloud cover candle pattern after you can sort of see that we had that trend line break on the cards. We sort of did open above it, and then we just had this dark cloud cover pattern, which was fairly bearish, and then we're following through today with a break of this rising trend line. And supporting this break, if we do close in this area, we've got this 7,060 level, which we certainly could bounce off. But the fact that we're kind of taking out these two matching, almost three. Let go, you little trend line. There we go. Well, anyway, you can see these three matching lows down here. Definitely the two. And almost the first one. So this has become quite critical support right here. So if we do close today below those, I think it's odds on that we get another push down to the 6,900 level and perhaps lower. So yeah, equities looking a little bit more bearish than they had been, and we were consolidating. We thought maybe we could push higher out of a base and chase US equities higher, but actually it looks like US stocks are getting a bit exhausted, as we're about to look at, and European equities rolling over. A bit of chat in the news today about the death cross. So I do have the 50 and the 200-day moving average. You can see we had the death cross in the FTSE a little while ago, and then as of today, we're death crossing it on the DAX as well. So the 50-day moving average crossing below the 200-day moving average, while both are pointing lower. So this one is a bit flat, the 200-day moving average, but nonetheless it is pointing lower. So that's a bearish signal, but even non-technicians, non-chartists pay attention to. It's even in the news today. So a few bearish developments, and you can see we've basically failed at that old high here in the DAX. In our Germany 30 contract, we were looking previously for another run up to the resistance as a place to look for places to sell the market down, but we haven't even really made it up there. We stalled out here, and then we're stalling for a second time. So a close, this is again that similar sort of pattern, like a little kind of evening star, indecision candlestick followed by a bullish candlestick followed by an indecision candlestick followed by a bearish candlestick. Bit of a kind of bearish pattern there in the scope of a generally kind of weakish looking market. We're below these two moving averages, which are both pointing lower. Only slight point of hesitancy is that we're not up at this kind of stronger resistance level. We're a little bit in the middle of the range, so it just puts our risk on the trade a little bit higher if you were to put your stops up above here somewhere. Interpreting this bearish pattern, obviously you can put your stops above here, but still could pop up to there and be in the range. So this is the kind of conundrum you have to deal with in terms of how to time these opportunities. But if we do roll over from today, I mean, it looks pretty good odds that we can come down and retest this support zone down here, and then we just have to see how the price reacts down here again. We've had a couple of big bounces. Bounce one, second bounce, not made it as high as the first bounce. That's a bearish sign. So you imagine if we get down there for a third time, maybe it's third time lucky, and we actually do break lower, and we get another bit of bearish action in this this equities correction. So at the moment, the price action is talking about an extension of the declines. Obviously, to nullify that situation, if we did just get a kind of daily close above, which you can see that's slightly higher, but we've had like 3 candlesticks failing in about the same area. So roughly around the 12, it's a shade under 12,500, the 12,470s. Close above there, then we'd be looking like a push up to the resistance there, and then maybe better odds to come and test the moving averages. So watch out for these highs, but at the moment, based on what we're seeing today, it looks like another test lower. Here is US markets. So this trend line is played out fairly well. After that big bullish candlestick, we were looking for just a close above both the moving average and this old peak here, but in fact we didn't get the close above it. We rolled over, and then again another kind of 3 candle reversal pattern, and now we're setting up with these 2 matching lows down here. So I think if we take out those 2 matching lows, that could take us down back down to this support, and potentially back down to the 200 moving average, which on Wall Street has not actually been tested yet. It was in the S&P 500 that actually pretty much touched the 200-day moving average. On the Dow, we haven't been down to it yet. But obviously worth noting, obviously, that this is the 50-day moving average up here. We are below it in terms of the price, but the 50-day moving average is still way above the 200-day moving average in in US stocks. So they still have a lot more of a bullish alignment than the UK and Europe. So then switching gears to gold, we've developed a fairly clear-cut support here now in gold. It was this old resistance and this 1305 to 07 kind of area. We're bouncing off it a little bit today. If we get a decent bullish pattern, it's a solid support, and we can definitely pay attention to that. But also, obviously, each rally off this support has been getting gradually a little bit, firstly a little bit lower to form a bit of a double top, and these last couple of times significantly lower. So it's looking like we could potentially break through this 1307. Whether we do or not, fundamentally probably comes down to Wednesday, because we've got the Fed meeting. So how hawkish Jerome Powell is, the Fed chair, in his first press conference after a Fed meeting will dictate whether gold holds this level or not. But the alignment of the moving averages is good. The overall trend is still fairly positive, although we've been capped by the 1375 for a while. But at the moment, it's looking like the market's kind of rolling over to fall through this resistance, fall through this support. And if it does, because we had such a bullish run up here, I don't think there's much going to stop it except that 200-day moving average, and gold often does overrun the moving, even though people watch it, it often does overrun the moving average anyway. And then last but not least, we've got oil, and a bit of a bullish development happening here in oil. The pound and oil looking the most interesting today. We've had this bullish candlestick last week that took us through this declining trend line. We also found support 3-4 times at this rising trend line. So the next step is to push above the 50-day moving average. But at the moment, you can see we kind of broke above it, we pulled back, and now we're running higher again towards the top of the day. So potentially this pullback's done all it can. Your choices, if you believe this breakout has legs, is wait for a move up to the 50-day moving average, and we maybe get a bigger pullback from there, and then wait for the break once you get through it. Or if you like to buy lower, maybe the market still dips, because it's a fairly range-bound environment. This is a kind of bullish break, but maybe we get another pullback down to, say, this sort of 65.30s, which was where we had this kind of bit of support coming in at these two highs. If we can push above it, maybe we come back to have to test it first, still sitting somewhere on the trend line before pushing higher. Last but not least, I'll just touch on Bitcoin. So we had this kind of bullish pattern here, this kind of pin bar-ish morning star pattern. We dropped right through to it on the open this week, but we're kind of trying to close today's gap. So we've opened lower, but then we're higher on the day from where we opened at the moment. So for me, probably if we can just get through where this pattern was trying to break higher before, that would be a good sign. But if we do take out the old low, I mean that's kind of a bullish pattern on the 200-day moving average. If we end up closing the day below that, that's going to be pretty ominous. And I think we probably take out this low down here and we head down towards the sub 4,000 mark. So I think that's all the markets I was looking to cover today. Quick question from Gordon about using the crowd sentiment. So just to clarify, that's the FTSE up here. You can see that basically the market's having a bit of a dip, and so naturally people looking to buy into that dip. So 83% of clients with open positions expect the price to rise, whereas 17% expecting the price to fall. So generally the nature of of the clients is that, and it's not just the LCG, just generally clients, retail trading clients will try and, when the market's falling, they'll try and buy the weakness, and when it's rising, they try and sell the strength. So that's all well and good, except when you're in a trending environment. So for me, it looks like we could be about to break down, but I can respect why people might be buying this, because there is a 7060 support coming in here. But I think you have to look at how the market is positioned. We're in a bit of a range right now. We're down near support, and everyone's looking to buy. So you certainly got some buying power down near that support. If we take out the support and everyone's still buying, then obviously they're going to have to give up at some point. And so they're going to those people buying are going to have to eventually sell out, and that's when you get the big move lower. I think that's probably the best way to read it, if that makes any sense. Ezra was just asking, I don't know if you missed the start, Ezra. I talked about the kind of major currencies, the euro, pound, and the yen at the start of the presentation. I don't think they're necessarily related to the G20. Certainly the kind of general trade war is playing in a little bit on the kind of weakness of the dollar, when you look at dollar yen here. And obviously the trade war is going to be a topic of conversation at the G20. But I would say moreover, with the yen, there's a little bit of political strife going on in Japan right now. And so the finance minister's caught up in a bit of a corruption probe. It could be linked to Prime Minister Abe. And so he's the one responsible for weakening the yen. So that's why you're seeing the dollar weaken here and the yen strengthen. If the leadership changes in Japan, there's a risk that the yen reappreciates, because the new leadership unwinds the current administration's policies. I think that's a big factor. With the pound, obviously we discussed Brexit, so a bit of Brexit uncertainty coming out of the pound at the moment. We've got the Bank of England meeting this week. They're not likely to raise rates, and to my mind they're probably not likely to indicate much, but if we are, almost one is self-reinforcing. If we do get a transition deal agreed here, then that's a little bit of risk off the table for the Bank of England. If they want to be a little bit more aggressive about raising rates to try and ward off the higher inflation that we have in the UK, they can do so knowing that there's a transition agreement in place. That's a bit of a buffer for them to raise rates. So one is self-reinforcing. I think if we get this transition agreement, probably there won't be a rate hike this time, but a rate hike in May looks pretty likely. That's the next time we get the economic projections, the quarterly inflation report. And as far as the euro, I mean, it's looking a little bit softer than the pound. We don't have the ECB, so it's probably going to be just purely react on what happens at the Fed. All right, guys, I'm going to wind it all up there. Thank you very much for attending today, and good luck with trading for the rest of the week. We do have a webinar on Wednesday. That's about the ABC. There's a trading pattern, the ABC trading pattern. So it's kind of a way to find entries in the market, if you like. If I'm taking a stab at it here. Is there some examples? Yeah, just be, when you get a nice trend, for example, here you've had the big rally up, you pull back, so you've got the 1, got the 2, and then when you have the 3, the 3 is when you look for the break of the old high, which was formed by 1. So you can even find smaller examples, like a little push up 1, 2, and then 3, and then 3 is when you take out here. So when they line up together, it's that kind of consolidation, then momentum breakout way to kind of trade some confirmation from support. So anyway, I'll go into that a bit more detail on Wednesday at 12:30 GMT. Cheers, guys. Thank you very much for attending. Jasper signing out.